this booming, how should I say, ultra rich Indians have invested, whether it is larger houses or better homes or bigger cars or jewelry, so on and so forth. They've made supernormal money on markets as well. Is this a theme that DSP Mutual Fund finds exciting? And if yes, is this theme still worth investing into?
So first thing is that your assessment is absolutely right. If I may name it as the premium segment, it has seen a very strong traction, right? And post-COVID, we saw sort of a hedonistic consumption demand where people came back and said that we want to consume more now because for almost 2 years the consumption doors were shut. So there was a big revival for things you pointed out, and plus including, let's say, tourism and traveling. All those numbers came out very, very strong. But our sense is that some amount of this is now tapering, right? And why do I say that? If you look at the wage growth for white collar workers in India, so I'll put like three segments. So IT and ES, auto ancillary and autos, and BFSI. These three sectors account for more than 2/3 of all white collar wages and salaries in India. And over the last 4 years, their CAGR growth in salaries and wages for employees has been 14% or more, which is one of the strongest numbers we've seen in a very long time, right? But these numbers have now started to slow down. Particularly in the IT and ES space, the numbers are now in low single digits. So our sense is that some of these numbers, which have been very strong, could now normalize, go back to pre-COVID trends. Our overall growth is now just about 7% on private consumption, and those numbers are not very strong. They are actually below our long-term average growth rate. So one sense is that the K-shaped recovery, where the upper end was doing extremely well, is now normalizing, while the lower end that is beginning to improve, but not at a fast clip. So in fact, what we see in data is that the K-shape is now normalizing adversely, which means that the upper leg of K is now coming down while the lower leg is rising at a much smaller pace. So we'll be slightly more cautious in terms of how we approach consumption. We are happier looking at more non-discretionary consumption like staples and pharmaceuticals and healthcare, where we think that the trends could be more persistent.